I think Visa and MasterCard and your community banks and JP Morgan Chase is as happy as can be with this Stablecoin Act, because I think it means the current system remains exactly the same. Basically, nothing changes, in my opinion.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Welcome back, Skippy and Doogles. Here again. We're going to kick it off with listener mail this week and then talk mostly about stablecoins. I think everyone has seen Circle's IPO, which we discussed a couple weeks back, has taken off even further. It's now up, 500, 600%, something like that. So what are these stablecoins? What's a bit of the history? How should you think or not about it from an investor standpoint? So that's the episode today. Before we kick off, please rate and review the podcast. It helps us so much if you can rate and review the podcast. And again, I said we're going to kick it off with listener mail. SkippyDoogles@gmail.com. That's where you can send the listener mail. We love to get it. He likes to get it. I love to get it.
Oh,
Okay.
This listener mail breaks my heart, man. But there's a reason we're starting with it, because this happens to a bunch of people. And so we had a listener email us and ask to leave their name off. And I totally understand why, but we want to highlight it as a learning for, everybody. There's some really good details in here, and our heart goes out because this is investing. There's a lot of highs and lows over the last 8 years here in the story.
And because we're going to talk about, you mentioned this PSA, we're going to be talking about stablecoins today. Stablecoins, a type of crypto. This listener mail is about crypto. Here we go. Should I just read it verbatim?
Okay. At least give us the high level. Each detail here is important.
Yeah, I'll do verbatim. After my dad passed away in late 2017, I invested about $100,000 in the crypto market. Initially, I shouldn't have skipped this. Total lifetime investment. I initially got in when Bitcoin hit around $16,000, essentially buying near the top. When Bitcoin dropped to about $4,000, I invested more. And by October 2021, my portfolio had grown to roughly $650,000. Had I not fallen for a scam that cost me around 10 Bitcoin, think about the price now, people, as well, I would have been well over $1 million. Instead of cashing out, I held on through the downturn all the way to the bear market lows around December 2022. And by then, I had also gotten involved in some DeFi schemes and lost another substantial chunk. When the market began recovering, I was more or less back to my original investment amount and decided to pull everything out just to break even. In reality, I wasn't even breaking even, thanks to U.S. tax rules that don't allow gains and losses across different coins to offset each other. I'm sharing this so anyone considering crypto can think twice before jumping in. And if you ever find yourself up a life-changing amount, withdraw it and put towards something real and meaningful.
Okay, we're gonna stop. There's 3 paragraphs there. We're gonna talk about each. So the first paragraph ends, had I not fallen for a scam that cost me around 10 Bitcoin. That piece. Okay? One thing that I consistently hear when I talk to crypto investors is some sort of that. The next paragraph mentions a DeFi, that's a decentralized finance scheme, right? That lost a substantial chunk. So, and then that's before we even really talk about, I'm going to call them trading fees, but like on Ether, it's called gas, which is a fee to move the crypto from one place to another. So this is what breaks my heart more than anything else. And I know we've been critical of crypto on the show, but it's like, I have yet to talk to the person that said, oh, crypto is life-changing. And then when you talk about their personal trading experiences, that doesn't have some sort of, but this one time the South African company did whatever. Like, it's so sad. That's not how a well-developed financial ecosystem works. No one says, I invested $100K here, I hit this really hot ETF, or I got in for this IPO of whatever. It took off, and it went to $1 million, and I should have sold there, but I didn't, and it came back down. In that story, there's the heartbreak, the roller coaster ride. There's no and a third of my money disappeared because because that's what happens when you trade ETFs. No, that isn't what happens when you trade ETFs.
Maybe ARK. This is kind of like how we talked about, I think it was a few weeks ago, maybe even months ago. We discussed how sometimes you make decisions and there are downstream decisions that you're making at that time implicitly that you may not realize. And I feel like crypto, getting involved in the crypto ecosystem, can fall into that same general thought process. Because you decide to get in crypto and you don't realize, like, this scam, I don't know what the scam was. Just like this scam. I don't know what it was. But most likely it came across as something that's another thing that you do once you're involved in crypto, and not necessarily like a scam. Like, if you decide to get into whatever token this was, now this person comes in and goes, oh, well, everybody that gets involved with this token also handles it this way. And you go, oh, okay, well, that's the thing that's happening. Like, these kinds of things can occur sometimes. Again, I don't know this exact story, but I do think that's something that's worth thinking about. What are the downstream decisions you're making when you make that first decision?
Totally agree. So we're going to shift away from crypto slightly and let's shift back when we talk about stablecoins. But let's talk about this scenario when someone does something similar in a more traditional sense. They invest $100,000 and in a short period of time, it's 10x. We don't give stock picks or really advice on the show, but we do talk about these issues. What guidance might you provide for someone in a situation like that?
Wow, there's so many questions I have because I think it's highly nuanced. Mm-hmm. The first thing I'll bring up, though, is I'll say it depends in my mind on what the sell criteria for the investment was in the first place. Because there are some things where you might say, this is something that I just from the get plan to invest in the long term, and I'm going to hold. And it's a thing that you still believe in, may have gone up by 10x, you want to hold. There's some cases where this might be something where you say, I believe it's undervalued today, and I believe it's undervalued by 60% today. And if it goes up by 10x, like, heck yeah, I'm getting out. It's 40 times sales at this point.
I'm going to interrupt there, sorry, but there's a few things you can't skim over. One, just think about it from this listener's perspective. I believe they are the ones that said $1 million was a life-changing amount of money.
Yeah.
One, I want to hammer home a few points, even outside of crypto. If your investment goes up 10x in a very short period of time, it's very likely not diversified, meaning it's in one asset, one stock. Maybe it's two or three stocks, right? Maybe it's one ETF that's a old school Cathie Wood gambling game, effectively. But what I would emphasize first is if something that you don't think is a life-changing amount of money turns into a self-defined life-changing amount of money and it's not diversified, take a step back. Think about that. Think about the fact that if my investments ever go up this quickly, Doogles, you're going to have to listen to me twice a month complain about that means I'm investing poorly, because if something can go up that rapidly, it can go down that rapidly. I would strongly caution this much volatility means you're doing it wrong. And again, I'm trying to step away from crypto here for a second. It means you don't have enough diversification and you have way too much volatility in your investing process. And that means you need to correct those things as soon as possible.
So what can I say this in a different way?
Yeah.
More simply, and you tell me if I'm being too simplistic with it. If you have an investment that goes up 10x in a short period of time, you should probably sell.
Okay. Well, so that if that investment is 2% of your portfolio, it's a different conversation than if that investment is 100% of my portfolio. Okay. So thank you for saying that back, because you could intentionally be saying this is a lotto ticket with 2% of your portfolio.
Yeah.
Yes.
Yeah.
Now, the thing where I want to bring it back to crypto, and then I think we jump into stablecoins, is the most challenging, and I would argue this is impossible, piece of almost every crypto is there's no earnings, there's no cash flow, there's no sanity check, right? NVIDIA, I said on this very show 24 months ago, I said the way it's currently priced, it would be like a 1 in a million chance. I'm not sure if I used those words or said it slightly differently, but I said it's very, very unlikely that the stock's cash flows will perform the way the stock is priced. You know what? They've done it. They have like doubled or tripled their actual cash flows. Cold hard cash. Like every quarter for 24 months. More power to them. I have never seen that before. I don't think I'll ever see that again. But if this is NVIDIA, you can go like, oh, well, the price to earnings ratio is still in a reasonable range, so I don't have to sell. even though it went up 10x. In crypto, that does not exist. That's why I call it a speculation rather than an investment. And that's another reason, in addition to all the scams we've outlined here, another reason I have so much concern about it. But I just think that's important to point out.
Yeah. If you have comments or thoughts on what we just talked about, because I believe that there are a lot of people that probably either agree or disagree with the point that we just made, and it's one that's worth discussing by email or wherever, skippydoogles@gmail.com. Please hit us up if you have feelings one way or the other about what we just discussed.
And most importantly, thank you to the listener that sent this in, because I think this conversation saves a bunch of people money, and I think that's really important to share. So I'm just so appreciative of the ability to be able to talk through it.
Appreciate the vulnerability. Stablecoins. Stable coins. Let's do this. As I promised at the beginning of the show, we're going to talk about what they are, going to give a little bit of history, and then discuss some pros and cons about the ecosystem around stablecoin. You've got strong feelings, Skippy. I'm excited to hear those strong feelings and want to have this discussion, because this also might be one that could save some folks money. At the very least, I think it can be educational, because when things become this hot and heavy in the news, it's very easy for folks to either get involved or start double dutching, deciding whether you're going to hop in. And it's important to know what you're getting into if you decide to get into it.
The stablecoin bill that passed the U.S. that went through the U.S. government was branded as the Genius Act, which just kills me. I mean, we're going to start calling things like, literally, we could write a law that says this is the worst bill ever, and it will steal $5,000 from every citizen. And we'd call it like the world's most brilliant money game.
Yeah. It takes me back to, was it 3 or 4 years ago when the Inflation Reduction Act came out? And we on the podcast were like, the only thing this bill doesn't do is reduce inflation.
No, every party is guilty of this, but we almost need an independent third party naming service. It's like, this is like naming hurricanes like happy storms when we know they're coming to kill people. It's ridiculous.
It is ridiculous. Okay, stable coins. What are they? I'm going to read this because I think that this is a good definition here. Stable coins are cryptocurrencies designed to maintain a stable value, typically by pegging their price to a reserve asset like a national currency. Boom. Most stable coins are pegged to the US dollar. Mm-hmm. And people may not know this, but there is 80+% of the stablecoin market that's really sitting in a couple coins. It's highly concentrated right now, and both of those are US pegged stablecoins. So, cryptocurrency meant to provide stable value. They are pegged to some kind of reserve asset, and the bulk of which are pegged to the US dollar.
Yeah, and those are commonly referred to as USDT and USDC.
There you go. Look at you, grasshopper. We're going to talk about those more specifically. That's exactly right. Going to talk about those more specifically. So the way you can think about this, and I think you hit on this a couple weeks ago, 2 or 3 weeks ago. The way you can think about this is you put in $1 to this, and when you want, you can get your dollar back out. That is the purpose of these coins. The advantage, high level, to something like that, because you might be like, I got my dollar anyway, why would I do stablecoin, is that you can take advantage of what sits within the crypto protocols, right? So you think about programmability, transferability, all that kind of stuff that typically comes along when people think about crypto. You get that, and the stability of the US dollar. That's a high level. We're going to break that down. We're going to break that down more, but I'm just trying to give the high level. Go ahead.
Do you know how hard I'm biting my lip right now?
Yeah, no, you should be. I see the blood dripping down your chins. Okay. So that's the high level of what they are. As I mentioned before, there are a couple that are dominating right now. So Tether, that's USDT, as Skippy mentioned. Tether is the OG, and it's the largest. Tether has over $100 billion of Tether sitting out there as of last year, something like that. Over 70% of the stablecoin market share, roughly. Number 2, you've got USDC, as Skippy mentioned. That's the one that is put out there by Circle, the company that recently went public. So you got USDT and USDC, as Skippy talked about. Those are the big players. You cool if I give a little brief history? Because I like a little history sometimes.
I love this. I haven't learned anything yet, but I'm going to, Douglas. Just wait. I'm joking with you. This is good. I appreciate the background.
All right. So stablecoins roughly about a decade in right now. The first stablecoin that came out was put out there by an organization called BitShares. It was BitUSD. This was back in 2014. So the world's first stablecoin. The strategy they used for this was that they backed it by crypto. It was called crypto collateralized. Ooh, that's a tough one. Crypto collateralized stablecoin. So they said, we're going to keep this using all the technology and algorithms behind crypto. We're going to use that to collateralize this crypto. Fast forward, that ain't work. It lasted about 4 years, and then just all the rails and the wheels and everything came off that there bus. So then folks was like, okay, what if instead of collateralizing this with crypto, we did it by fiat? So Tether, as I mentioned, the OG, Tether came out with the coin, originally called the real coin. They came out with a coin where they said, you put $1 in, we keep that dollar in some cash or cash-like reserves. They've gotten a little bit in trouble with this in the past because maybe they weren't always doing that. But in theory, we're going to keep this in cash or cash-like reserves. So when you request that dollar, you get that dollar back. So that was Tether, the OG. They're still around. There are others. Once they did that, there are others that popped up. MakerDAO. We've talked about the DAOs. DAO. We've talked about those in the past. MakerDAO came out with a little something that was more of it was ETH backed initially, is then shifted over. Their thought process was, we're going to do a little bit of column A, a little bit of column B. And so it's going to be collateralized by crypto, but you have to put in more in order for that to happen. So if you want $1, you're going to put in $1.70. That tries to handle some of the volatility that exists in crypto, etc. So more and more of that happened. When policymakers really started getting revved up and scurred around this was when Facebook then said, we're going to come out with our own coin. Libra is what it was initially called. So Facebook, now Meta, back in 2019, they said, we're going to have our own coin. And the government went, okay, that's going to be big. Now you're having a big technology player that is fully global, can come out hard with this. We should really be paying attention to this. In 2020, the stablecoin market roughly went from about $5 billion to about $20 billion into that year. So in the grand scheme, it was still, that's a lot of money, but it was relatively small back then, but went boom, 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 up overnight. Over the next couple years, it went to almost $200 billion in market capitalization. So really started taking off. That's early history. Any thoughts, questions on the first roughly 6 years?
What's interesting about this is how many failures there are. Interesting. Go ahead.
Yeah. So you might be asking yourself, okay, Self, you done said that most of the stablecoin market's made up by those two coins, but what percent of the overall crypto market are these stablecoins? Well, Self, the answer is nearly all. By 2022, about 70-80% of all trading volume in crypto was stablecoins. So the reason that that's important is because when you think about the crypto market and folks getting involved in crypto, people get involved in crypto to use that as a currency, but there are times where they want to take money out of whatever the specific coin is. Bitcoin, let's just use an example. They want to take money out of that coin, but they don't want the money to leave the crypto ecosystem. So what they can then do is pump it into a stable coin to let it sit, less volatile.
You said 70 to 80%?
That's what I came across.
Trading? Okay.
Yeah.
Wow.
People check my math. If I'm wrong, go check it. But this is what in my research is what I came across. And going to your failure point, so 2022, 2023, do you remember anything that happened in that period of time?
Yeah, lots of breakdowns. And I think this is a stable coin, but one of them completely went bust because of their algorithm.
Yes.
Are you going to talk about that?
Yeah, that's exactly right. Okay, so in the 2022, I'll start with 2022 time period. This is when Terra USD, so UST is what it's known. It was an algorithmic stable coin. This is when I mentioned the wheels coming off the bus, right? Those wheels did not go round and round. The algorithm got all kinds of tripped up. It was supposed to be $1 for $1, right? Like all the stable coins, but it lost its $1 peg in May 2022. And then at that point, the algorithm just got confused. That's the only way from what I said you can describe it.
I mean, the algorithm made some assumptions that had been, this is classic, adding complexity to investing, made some assumptions that has historically been the case that were no longer the case, and it went to zero. And what's so interesting about that is my version of the listener mail, as I've tried to educate myself with crypto, is one of the fascinating, this company was trying to create like an index fund around it.
Yep.
And that startup had stored their reserves in the Terra USD. That company went bankrupt overnight because of because of the side ramifications, how interconnected everything is. Nothing that they did wrong other than not understand the algorithm that their stablecoin was backed in. It's scary.
Yep, you're right. And it is classic. I like to use that word. It makes me think about going back to long-term capital management in the late 1990s, who they were using why can't I think of it right now? Black-Scholes. They're using the Black-Scholes equation with derivatives. They used all sorts of historical information to say yes, that's all true. They were using too much leverage. That's the real problem. Yes. Yeah. And just like you said, they were basing off of historicals to say there are things that typically occur and do converge. I'm going to skip all the detail. That then and that in year 1998 started to diverge because of the collapse of I think it was the Thai baht. Then collapsed. Therefore, rates started going in opposite directions. They were over leveraged, fell apart. This is classic finance. Anytime that you see something collapse like this, typically it is based off of two things. You nailed one of them. It is leverage and history not repeating itself. Those are people betting that history will repeat itself and over betting with leverage. So exactly what happened here. So this thing then wiped out tens of billions of dollars in value. So you take what happened a couple years before this with the Facebook Lira currency, Facebook talking about doing that, never launched by the way, but they talked about doing that. And you take the Terra USD, and this is where regulators really said, okay, we got to do something here because there's something that, one, we don't understand. That seems like it can wipe out a lot of money. So let's regulate this thing that we don't understand, which typically ends very, very well. Say something. I see you biting your lips again.
I mean, this bill, I'm not going to talk about the bill much, but this so-called Genius bill was supported by community banks because community banks, as I understand it, will have the ability to launch their own stablecoins. Is this really where we want to head to a place where folks like Amazon and Sam's Club and whoever else and Starbucks can make their own digital coin? This is an improvement somehow? Like, come on now.
As I just said, what happens when policymakers get scared and don't understand a thing is they create bills that are based on fear and lack of understanding.
Well, and then they make compromises because very much the banking community said, we don't like this bill. Like, you know how many community banks employ people in these small towns that are represented by so-and-so from Missouri, right?
Yep.
This is just what happens.
Yep.
So they watered down the bill so much, as I understand it, that you have to hold a 1-to-1 reserve for your stable coin. Let's pretend it's in USD. 99% of them are going to be. That means if someone sends you $1, you have to keep at least $1 on hand to back it. Which, gosh, Doogles, if only someone had figured out a way to store and maintain your dollars safely for you. Like, I didn't know this was a 2025 problem. I've never had this problem.
All right, we'll get back. We'll get back to your.
Am I going off the rails already? You want to continue the history lesson?
Okay, yeah, I'll continue history. Then we'll come back to that because we need to go off the rails a little bit. So now we're in 2022. That happened in 2023. You remember Silicon Valley Bank and others, but Silicon Valley Bank goes under. Well, the reason that's important is because the reserves of Circle specifically, there was a chunk of their reserves that were sitting with Silicon Valley Bank. And so between what happened in 2022 and this, it also tested not just overall what happens with stablecoins, but it tested those that were fully backed by, or allegedly fully backed with cash and cash-like reserves in US dollars, because it went, okay, now let's see what happens when you say we're fully robust. So what occurred is you have number one, Tether. Tether goes from $1 to trading at about 94 cents, holds steady there, then goes back to $1. So it tested, came back to $1. Circle, who I just mentioned, that was in Silicon Valley Bank, it went down to about 88 cents. So no longer pegged, went down to about 88 cents. Then they were able to recover and got back to their dollar. That's important from an industry perspective because folks in the industry could then say, see, it worked. It worked.
Yeah. The 7 other ones failed in advance, and this one almost failed, and then it was saved by the U.S. government and the legacy financial system.
It worked.
There we go. I agree.
See, when you start digging underneath and saying, how did it work? That's when you get yourself into trouble. What is important is it worked. All right. So with that, then there are other folks started getting into it. Where you started going is what we've seen recently that's coming up. But even players like PayPal, who gives it a little bit more legitimacy. Now, PayPal is a small player in this market overall. From what I've seen, as something a little bit under $1 billion, that's a decent amount of money, but it's like not a huge amount of money that we're playing with here. But the others, like Tether and Circle, the amount of money and the transaction volumes that are happening right now, what I saw as of last year was more than Visa and MasterCard combined, the amount that's flowing through their systems. That is a lot of money. Lot of money. Okay, so that brings us to today and the Genius Act. That's where we are. That's the history. It's about a little over 10 years that these have been around. We've seen ups and downs. That just gives folks a definition and a little bit of history as to how we got where we are with stablecoins.
Do you have, unfortunately, I don't have this. I can do some research offline. Do you have the typical fee associated with moving these transactions? I know it varies.
So it depends. Yeah, it does depend. Where I looked for this, I didn't look at Tether. Where I looked was I was curious the way that Circle was making money specifically because they've taken off. And Circle today does not take one, at least not from the user. So the vast majority, I don't have the number, but the vast majority of Circle's revenues comes from the treasury reserves, just the interest rate. You were mentioning that last time, like how much money they do not take from the user. A way that it does seem like they make money off of transactions is through their APIs. So they'll allow other people to use them. I don't know what those fees are, but as far as the user is concerned, it seems like it's zero at this point.
Yeah, and that's crypto's much more mature than it was 7 years ago, because that was pretty much not the case 7 years ago, based on my understanding. What's so interesting about the Circle IPO and the current craze is it's almost like Circle's kind of a digital bank, except they have all these regulations where they can't actually loan that money out and make a better return than you can just sitting on U.S. treasuries. So it's like from an investor perspective, and from my perspective, I'm being very clear about this, it's like a bank with a bunch of handcuffs on that's way worse than investment in a normal bank.
Well, but it seems like they're getting some ability like that. I don't know if it comes through the Genius Act or not, but it seems like they're getting some ability through DeFi, like the decentralized finance capabilities. It seems like there's something that they're either starting to be able to do or to be able to do. It not being backed by FDIC starts to make this, I don't know what the word is. I don't want to say interesting.
But the requirement of one-to-one reserves, one-to-one cash-like reserves.
No, yeah. Which for a bank is what? Typically, what does a bank need? 10%?
10 to 20, I believe. Yeah. I can double check that. But so that's entirely different, because you could have 80% of equity out in people's mortgages or other loans, where you're making 7 to 11% or significantly more. I just would argue a bank is a better investment, and a bank would have FDIC insurance, but that's besides the point. So as you give the whole history here, there's 2 questions that come to mind for me. First is, maybe 3. First is, all I heard from the crypto crowd was that the legacy financial system is so horrible that we need decentralized finance. And the US dollar is so inflation prone that we need Bitcoin. But you're telling me, I'll make the first one statement. You're telling me that 70 to 80% of all trading happening in crypto is in stablecoins. That seems to counteract one of those points. The question I have is, if the US dollar is so terrible, why would we put all this time and effort into recreating it with a digital ledger?
And you want that one answered. The second one?
Do you have?
What I can give is the perspective that it seems like the crypto, I'm not taking the Doogles perspective for a second, just for the sake of this conversation. The perspective that it seems like the crypto folks have. And this, I can't answer the first one. But for the second point that you're bringing up, you have to look at what the advantages of being on the blockchain are.
Advantages on the blockchain, okay? If the legacy financial system is so horrible, why did Circle IPO on the legacy financial system? Why didn't they IPO on the blockchain? I don't understand.
Well, I think with Circle specifically, I don't think they have the position that the legacy financial systems are so terrible. I think they're saying that they can effectively become like a backdoors, that doesn't sound good in finance. They can effectively become a way for the government, the U.S. government, to have a digital currency without launching one themselves.
Interesting. I don't know. As you can tell, I'm pretty skeptical. I think if only someone had figured out how to store and keep dollars safe, that would have been amazing. If only someone could figure out how to run a digital ledger and maybe even keep that digital ledger safe, that'd be amazing. To do it without fees, that'd be absolutely incredible. I don't know. How has JP Morgan Chase never figured this out? Like, I don't understand. And if only someone had figured out how to use that currency all over the world with insurance and protection. Now, I have a friend, been to 4 different continents in the last 7 months, and that friend has tapped their Visa card in every place about 100 times, and it's worked just great. If only crypto was here to save us, it'd be really wonderful.
Yeah, well, let's see what happens over the next 5 to 10 years. Where this potentially can start to get more interesting, I think, and this isn't against the legacy financial systems, but is the possibility that it unlocks for the everyday user. So it might not be that Circle is lending out money like it's a bank, but is there greater ability for me, like to create like the next version of Lending Tree, for example, where like, am I now able to use the protocol then to more easily lend money in like a peer-to-peer kind of way because of blockchain with something like this backed? I don't know. But that's where I think the industry has to bet that things are going. Because to your first point, that was not a question, but a statement, is at this point you're saying, okay, the crypto market will work if it's 100% backed by the currencies that we've stated that we want to get rid of.
That's what the legislation says.
Yeah. And so if you take that, if you go, okay, that's kind of where things are trending overall, then you have to believe, if that's the case, now what are the advantages? And the thing that I can think of as at a high level is that it allows for different kinds of peer-to-peer transactions.
You're acting like Lending Tree, like Kiva.org, doesn't already exist. It does. Yeah, there already is a digital ledger for this. You're acting like Visa and MasterCard don't exist. You're acting like our banking system does not exist. Now, is there places...
Hold on. Yeah. Hold on. Yes. Okay, this maybe I should just let you go, because this might be where you're going. I think coming at this from a U.S. lens is different than coming at it from a non-U.S.
This is probably a good thing for the U.S. in terms of solidifying reserve currency status, because we talk about cross-country transactions all the time, and the fees there have historically been ridiculous. I think there's ability to do this, but I mean, there's other cryptos that have, like, I believe it's Stella, that purchased Western Union and is using their cryptocurrency blockchain to basically track those payments. People were already headed that direction. Maybe there's some lift there, and I'm sure there's some other things, like maybe transaction on the internet becomes slightly easier. But my point, and I think what the legislators wanted to do, is give crypto a thumbs up if they recreate the legacy financial system within crypto. And that's hilarious to me, because 8 years ago, the crypto crowd would have told you the legacy financial system is the worst thing in the world. And now people are cheering from the rooftops because they got legitimacy from the legacy financial system and from U.S. congressmen. And it just seems like we're chasing our tail here. And maybe it's frustrating to me.
Yeah. And to the, okay, so I'll take off I did all this research and all that stuff and just talk from a Doogles perspective. Skippy and Doogles talking here. Typically, when there are new innovations that come out, the new innovation needs to somehow be this, in the parlance of technology, 10x better than the last thing, for it to really for you to get over switching costs and all that, right? Like, it typically has to be that good. 10x is a seemingly random number, but what it means is it has to be so much better that folks are going to go, like Uber and taxis, where you're like, yeah, I'm going to use the Uber or Lyft app, because usually I'm just waiting around for a taxi. It's not transparent. Like, it was so much better that people switch over. And I think the question that you're posing in the form of a statement here, really, that as I was doing this, I agree with, is where's the 10x? Like, maybe it's a bit better, but like, this is a 0.9,
Doogles. This is not.
Yes.
I am a Visa shareholder. I'm sure I'm biased. I was in Africa last week and I was tapping my Visa card like crazy, and life was so much better, in my opinion, for the merchant that's accepting that money from the crazy tourist multiple countries away. So much better for me because I have the protection and security and everything else.
Yeah.
I'm not worried about, this, that, the other. There's an incredible amount of value in something like that. And it seems like we're just trying to recreate it in a different way. I think Visa and MasterCard and your community banks and JP Morgan Chase and everyone is as happy as can be with this Stablecoin Act, because I think it means the current system remains exactly the same. In some cases, the payment rails might occur on the blockchain for USDC instead of, I don't know, the blockchain for that community bank. But basically nothing changes in my opinion.
And so with that, second part of that, so if you don't have the 10x, then what's happening? And I'm going to add on to something that we talked about when we brought up the Circle IPO before. There's so much momentum that's sitting right now behind the idea of stablecoins. And what the government did, the US government did, I believe here, is they, if nothing else, legitimized stablecoins, at least from a narrative perspective.
100%.
And so what's occurring now, if you think about this from an investor lens, what's occurring is you say, okay, so there's this, I'll call it an industry. There's this industry right now that's gotten a rubber stamp from the government in narrative form. Don't look at any detail. Got a rubber stamp from the government narrative form. There's this big IPO that's now gone 5 or 6x. And that, going back to our listener mail, which is what you said earlier, the reason why we did it first. If you go back to listener mail, those are the moments where it's easy as an investor sometimes to get caught up in a, I need to be a part of this mentality. And if you step back and say, what's the 10x here? If it doesn't start to become obvious what the 10x is, that when an asset goes up by 5, 6, 7, 8, 9, 10x, and you can't figure out the 10x utility, crickets.
Yeah, silence speaks for itself there. I'm sorry to repeat what you just said, but we started this episode talking about an individual losing hundreds of thousands of dollars in this ecosystem. Again, I'll shift from the ETF example I gave to the Visa MasterCard example. That hasn't happened to anyone I know running around swiping their Visa card. It just doesn't happen. I think this, to use your language, this is not a 10x. In my opinion, it's a 0.9. It's like almost recreating what we have today in a way that's harder to use and more confusing for your average consumer.
And so the reason why I was interested in going deeper into this, like myself, the reason why Doogles wanted to go deeper into this is because when I see something take off like this, I get very curious. And I'm like, is there something I might be missing? And so I wanted to better understand it beyond just the high level. And there are certainly like details, many, many details that I was missing, but the high level, like simple to understand, explain it like a 5-year-old answer as to why this is garnering so much money, I could not answer.
Let me ask you this. I don't know the answer to this question. This is not a plant. I'm not throwing you a softball, although it may end up being that. If I choose to do all my transactions in an internet-based society with a crypto wallet, primarily with one of the predominant stablecoins, and I get hacked or something, I the equivalent of you lose my credit or debit card. Do I have the same recourse I have in that situation in the legacy financial environment where I can call my bank or my credit card provider, cancel that immediately, safeguard my funds? Do I have the ability to do that? Like, I imagine Coinbase has some sort of something, but maybe not, because again, that was thought of as the big bad legacy financial system for the longest time when I was researching this many years ago, like 3 to 5 years ago.
Here, I can't give you a straightforward answer, which is part of the problem. Here's what I'd say, is it does depend a bit. It's what it doesn't have is this. It's not FDIC insured like the banks are. So there is not a bottomless pit of money that's there to protect a large number of people. What might exist is kind of what you said. Like, you know how Airbnb has if you're a host and someone wrecks your place, there's like the $1 million guarantee or whatever.
That's why folks rent through Airbnb on both sides rather than working with each other directly, because there's an insurance piece there that I'm arguing is the same reason why you'd transaction on a credit card.
And the difference, and the difference here is that would probably start to shift if Airbnb became the de facto like homeowner for all of a country, then you'd start to go, okay, do you have the reserves to back up everybody? But because it's not that, you go, oh, actually, I trust that Airbnb can cover enough that I feel safe renting my place or going through them. When something starts to become this big, what it doesn't have is the limitless backing of a government. That it does not have.
Yeah, 100%. And then the other thing, I'll keep this quick because we need to wrap up, but the other news in this last 10-day cycle was that folks like Amazon and Walmart might create their own stablecoins because they're so mad at how much they pay Visa and MasterCard.
Yep.
In what world do I want to trust Walmart with my stable coin funds? So when Walmart rips me off and I have a dispute with that retailer, they're like, actually, we control if you get a refund or not. I don't understand who this sounds like a positive step forward. Now, I can guarantee if they do something like that, there will be a discount on everyday prices and it will be the Amazon Plus or whatever. So maybe they can find a way. Starbucks really creatively with reward points found a way to get billions of dollars on their balance sheet that they can invest safely as people wait to spend their coffee, right? Target does something similar with the Target wallet. I'm sure Walmart has something. So they've already waded a toe into this, but I just cannot imagine your average U.S. consumer being like, oh, I can only buy this thing on Craigslist with my Walmart stablecoin dollars. Maybe we're headed there. But the only thing that sounds worse than the U.S. government being in control of my currency is some random merchandise company being in control of my currency.
And on that note,
thanks for hanging out with us today. If you're in Spain, come say hi. We got the whole country covered. We'll be around, and we plan on talking to you next week. Listener mail would be great because we talked about a lot of things today. I think a lot of things that could have strong opinions either way. So skippydoogles@gmail.com. If you love the show and want to help support us talking to you from Spain and other places, please check out skippydoogles.supercast.com. There's monthly subscriptions. You get the show early. You have to get premium episodes where we riff on stuff like this or tell you some investment that we're in the middle of researching investment options. With that, we'll talk to you soon.
Thank you.